What we're actually looking at is we're looking at the end of the fiat currency era, which has lasted from 1971. I think that as interest rates rise further, which would be accompanied by a fall in the purchasing power of dollars, pounds, euros, whatever, then those property values are going to fall even further, measured in those currencies. Meanwhile, in gold, of course, it'll be falling even faster, simply because the purchasing power of gold, I think, will not only reflect stability, but it will reflect a flood of money, realizing that its currency is going down, not gold going up.
The price of gold was resilient following the latest U.S. federal fund rate rise of 1/4 point to 5.5%, moving towards $2,000 per ounce. Gold traded between $1,965 and $1,987 in July, ranging from $1,893 to $1,983 in June. According to Alasdair Macleod, head of research for Gold Money, as interest rates keep increasing, fiat currencies such as the dollar, pound, and euro are likely to lose their purchasing power even more. This means that the value of these currencies in terms of what they can buy will decrease. On the contrary, Macleod believes that gold is expected to maintain its stability in terms of purchasing power, and it may even increase in value as more individuals become aware of the depreciation of fiat currencies. Macleod points out that foreign investors' perception is crucial regarding the U.S. dollar's future value. If they anticipate the dollar's value to decline, they will demand higher interest rates to compensate for the expected loss, potentially leading to further rate hikes by the Federal Reserve. However, the rise of new economic blocs like the Shanghai Cooperation Organization and BRICS nations aims to reduce reliance on the dollar and sanctions and are pursuing an economic revolution through de-dollarization. The recent initiative by BRICS to pursue de-dollarization has taken on a new level of significance, given that the sheer size and influence of BRICS made this initiative a severe issue. Macleod sees this could further reduce the demand for dollars and weaken fiat currencies even more. He suggests that these emerging economic blocs might turn to gold as an alternative to the dollar. This move could accelerate the shift away from fiat currencies and potentially lead to a new monetary system backed by gold. We will now bring you clips from Alasdair Macleod's interview with Palisades Gold Radio. But before we do, if you want more videos like this, ensure you smash the subscribe button and turn on the notifications bell for more videos. Thank you and enjoy the video.
Remember that we've been in a purely fiat world now for over 50 years. The whole of the sort of the education system when it comes to economic degrees and all the rest of it has basically dismissed gold as part of the monetary system. It has come up with it's entirely supportive of Keynesian stimulus, the use of credit, the manipulation of interest rates, and all the rest of it. You ask any economist about these matters, and they will come out with the same party line the whole time. They don't actually understand what interest rates represent. I mean, to a foreigner, and this is where the weakness in the currencies comes from. One of the main things is, and it's probably the most important now, is one's guess as to what the purchasing power of the dollar is going to be in a year's time. We know what it is today, yeah, roughly. What's it going to be in a year's time? If the foreigner thinks that the way things are moving, the purchasing power of the dollar is going to fall from where it is expected currently, a greater compensation in the form of interest rates. In other words, he's got to compensate for the discounted future value of the dollar. That's what drives the thing, not Fed policy. So if Fed policy is to raise interest rates to compensate the foreigners, then there's a possible chance that the foreigner will hold on. But even then, this is the problem with the debt trap, because you do that, the debt trap just gets worse. And the foreigner will probably think, oh my goodness, that might have been appropriate before they raised interest rates, but now they've raised interest rates, the economic effect is likely to undermine the dollar even further. So I'm going to require a yet higher level. Are they going to hang around for high? No, they just sell. And bear in mind that according to the US Treasury's tick system, foreigners own 32 trillion of financial assets, including 6.5 trillion of bank deposits, and cash. So, is it overowned? Of course it's overowned. In terms of the future use of the dollar, of course, this new super bloc of the Shanghai Cooperation Organization and BRICS, they're not going to need dollars so much. So they are likely to reduce their dollar holdings. And what they will do instead, what they should do is they will sell dollars for gold, because gold will be the new standard. Mm-hmm. And so that's why this undermines the fiat currencies. Full faith and credit is no longer good enough.
Macleod believes that the current global financial system is heading towards a significant transformation. He points out that since 1971, countries have been using fiat currencies, which means money not backed by any physical assets like gold or silver. But now, this era of fiat currencies is ending, and this change will have profound implications for the entire world economy. This shift is likely to have a significant impact on the world economy. Regarding the emergence of a new trade currency, Macleod thinks it could lead to the Russian ruble being linked to a gold standard, along with China's potential involvement. The central idea behind this development is to find a better alternative to the dollar, which is central to the whole situation. The Russian invasion of Ukraine was an immediate trigger. Although the slow shift has occurred for a while, the U.S. has been accused of weaponizing the dollar and punishing its adversaries through economic dominance. The rise of China and the gradual shift to bipolarity or multipolarity might be the second factor to explain why countries want to ditch the dollar. Let's get back to the interview.
It seems to me extremely unlikely that nothing will come out of the conference, particularly since the Russian state media has said it is on the agenda. I think the very fact that there is a new trade currency, and that is, in my mind, likely to be followed by the ruble going on to a gold standard, and also China. And it's that will undermine the dollar, because what they need to do to get this to work, quite simply, is they need to have a better alternative to the dollar for trade settlement purposes. And that's the point behind this. This is why gold is central to the whole thing. But it's not just a new gold-backed currency and suddenly the dollar collapses. But if you just look at what's going on in the U.S. economy, they are in an impossible debt trap. There is no escape now. The economy is just ensnared in debt. And if you look at the U.S. government's interest bill, that's now running towards $1 trillion. And, we are actually heading for higher interest rates. Why do I say that? Because bank credit is contracting. What happens when bank credit contracts? Well, the cost of getting, sort of borrowing, if you like, out of a bank goes up. If it's available. They'll turn. You go along to your bank and say, well, we got this facility of, $10 million. You sent us a note that it was going to be reduced to 2.5 million. We need to have that flexibility because our sales are slowing down, our costs are increasing. We've got a cash flow problem. We need to have some credit. And the bank will say, well, look, times are very tough. It's the old story about when it's raining, they take the umbrella away. But what it does mean is that the cost of credit in the sense of interest rates is going to rise. And it's got, this is completely independent of what the central bank, the Fed and all the rest of it say. They've lost control of interest rates. This is the point. They no longer have control over it. And the other thing is that we're beginning to see, if the dollar does weaken, we're beginning to see the inflation problem coming back. This is a trend which looks like it's coming back. And this is not good for future inflation, if you like, in the sense that the Fed follows it through the CPI. ECB does the same. And the other thing we're finding also is that there are cracks appearing in the Japanese financial system because the Bank of Japan has been forced. It wasn't put like this. It was just said that, they've changed their target. Well, actually, if you look at the situation, their balance sheet is fearsome. I mean, the losses that the Bank of Japan has, having done QE all the way from the year 2000, ramped up the prices to buy its bonds at the lowest possible yield, or rather the highest negative yield you can imagine. And now they're in a position where they can't actually buy any more. The reason that they have changed the levels of intervention and targeting and whatever is simply because they can't keep it together anymore. They're forced into it. And we're seeing that rate shoot up. I mean, I think it's about 0.61%. It's the highest it's been for 11 years. Now, this has knock-on effects because what do the Japanese banks do? They start selling French debt, for example, because they've been fairly heavy investors in French debt. They will sell our debt. I mean, and, this is, you've got sort of storm clouds gathering over the currencies, irrespective of this new BRICS currency story. We're actually killing our own currencies and economies without that happening. So what we're actually looking at is we're looking at the end of the fiat currency era, which has lasted from 1971. And, the end of that era, whether it happens slowly or quickly, I don't know. I mean, I think it was Hemingway who said, you start going bankrupt slowly and then quickly. And I think that's probably the sort of situation we're in.
As interest rates continue to rise, fiat currencies are expected to lose their value, making things more expensive, while gold is likely to remain stable or even increase in value. Additionally, emerging economic blocs may reduce their reliance on the US dollar. This situation could pave the way for a future monetary system backed by gold. Given the current interest rate trends and de-dollarization, could gold become a more attractive investment option? Please share your thoughts in the comments section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.